The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 27th wonderful Wednesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. I love this tool. This tool is called Self-Control Wins the Race. Now, can you imagine what it was like to live in the day when it took a month or more to cross the Atlantic, or when you might have had to wait months in San Francisco for a letter to arrive by Pony Express from New York, or maybe when you just simply had to travel over a bumpy road to the nearest town to buy a pair of shoes? You know, today, cutting-edge technology, it allows us to do almost anything instantly. In fact, right now, you could buy a pair of shoes in the moments of the time it's going to take me just to do my open this morning. Cutting-edge technology. You know, someone once said, the faster we go, the behinder we get. I don't know if behinder is a word, but somebody once said that. I don't know who it is. I tried to look it up real quickly this morning. Maybe somebody out there knows who said that. The faster we go, the behinder we get. Well, how about this? We all know the fable about the hare and the tortoise, right? And in that fable, the tortoise eventually got tired of hearing the hare telling him just how fast he was, and the tortoise went ahead and challenged that hare to a race. Now, in that fable, the hare, stopped to take a nap after showing off, for quite a while, running circles around the tortoise. So the hare stops and takes a nap before he finishes the race. And, of course, in that fable, the tortoise eventually run. Now, the tortoise made up for his lack of speed with what we'll call an abundance of determination and discipline. The tortoise realized that natural gifts will only take you so far, that in the long run, using what it is that you have to your fullest degree is the way to attain lasting success. Said another way, it's not what you have, but what you do with what you have that counts. Like the hare, the best and the brightest often resemble fireworks. Oh, fireworks are beautiful. They dazzle onlookers with their spectacular display. But what they lack, folks, is they lack that real staying power for real accomplishment. Be like the tortoise, not the hare. Keep an eye on your goal. Keep your feet on the ground, and you will be able to go the distance in any endeavor that you choose out there. Yes, we're all tempted by instant success, but history has proven that the slow, the steady, that's what translates into lasting progress over the long term. Yesterday, I spoke about the Great Pyramids, one of the 7 wonders of the world. The greatest things ever done on earth have been done little by little. Slow and steady progress, folks, will build the wonders of your world. Self-control will win your race. Let's go take a look at these markets out here. Right now, we've got the race going on between the Bulls and the Bears. Off to the races this morning. You've got the Bears. They started taking charge last night at about 3:10 in the morning. Right now, you've got the Dow futures off about 60-plus points. The ES Mini down 7 or so. The NASDAQ off 12. Russell 2000 off 7 points. U.S. dollar, King dollar on the move this morning. We've got gold up $1.50. You want to talk about the tortoise and the hare out there. Each Friday afternoon, the CFTC provides all the data that you could ever want, the commitment of traders data. You just have to spend some time with it. There's spreadsheets. That is really where you can see the tortoise and the hare out there, the large commercials. That is the tortoise. That's those large ships, those big commercials that build their position. They can't build their position overnight, not like the non-reportables. The non-reportables, that would be individuals like yourself and I, so small that the CFTC doesn't really care too much about us, and, they classify us as non-reportables. They still give you that information. Well, what's going on inside the gold market? You've got the commercials taking their largest net long or smallest net short position, however it is that you want to take a look at it. They have been building that for weeks and weeks. Yes, there's been some pressure on gold, but I can tell you that the tortoise out there, the tortoise in the gold market is saying, The tortoise out there, listener out there, remember, you can catch the live show here. I just got to get my voice here right. You can catch the live show. It gets streamed to your smartphone, your mobile device out there, your pad. Just go to the homepage at tfnn.com. Over on the right-hand side, you'll see that button where there's 3 little smartphones. Click on that. And, of course, if you're listening in, you can always catch the archive on Channel 9. That way you'll be able to see the charts. As we take a look at the ES-Mini, this is the 10-minute chart out here, but it just so clearly shows a 100% move of a move. I mean, you couldn't really get too much more perfect out here. If you came in and we took a look, this is a 10-minute chart again. We take a look at the swing point out here. It's a swing point coming in at 6:20 in the morning on March the 25th out there. That high, 1560.50. And what we saw out here at 3:10 a.m. this morning, 1560.50. Gotta love it. That's a 100% move of a move. If you do a 100% move of a move, what's going to happen? Usually something else. In this case here, what we're seeing is a little bit of a retracement. If we put up the 30-minute chart right now, what you'll clearly see is coming into the time frame here of 8:30 this morning, made a 0.618 retracement off of its most recent swing point low, as well as that 100% move of a move to the downside. How about that? If you take a look at these swing points here, this little cluster of swing points right around the 8 a.m. time frame yesterday, we can see that that is, in fact, where the ES-Mini has traveled to. So you had a 100% move of a move to the downside. You had a 1.35 expansion of a swing point. We know that 1.272 is Leonardo Fibonacci's number. So we'll go ahead and say 1.35 is close enough to 1.272 for our line of work, and what it was also a 0.618 retracement. What did we see out here? We saw a pause. We saw a pause coming into that 8:30 session. Was that the bulls? No, it was not. It was just simply a 100% move of a move and a 0.618 retracement out there, but that was not a bullish candle at all. Maybe, if anything, just a little bit of a timeout. We should see prices move a little bit lower, but what we are seeing here is we are seeing price in the oversold territory. Of course, last time prices were down in that oversold territory was when the low was put in at 130 a couple of days ago in the marketplace. And what is it all about? Well, it's certainly all about what's going on in currency land. So let's go flip over there. We'll flip over to the currency chart. We'll start off with the Queen. We'll take a look at that weekly chart out here. What we can see on this weekly chart, that hammer has been blown away. That sledgehammer has been crushed. That was the hammer that came in last week. That low out there, 128.42 in the marketplace right now. You got the euro traveling at 127.7. What we can see here is the 0.618 retracement happens to really line up with this swing point. You can see the euro is trading in here. Yeah, it's a weekly chart. It's only Wednesday out in the marketplace. We'll just blow this up just a tad for you. If you are watching, the high of that swing point is 128.0, and so you can see the euro traveling in there. We'll see if the 618 level, right around 126.785, whether or not that will hold, because if that doesn't hold, folks, you know, we talk about 100% moves of moves. We talk about swing points out there. We just took a look at, because market behavior is the same. It doesn't really matter what it is that you trade out there. That's why we want you to understand those major intersections on a stock chart, because you understand major intersections each day as you drive your automobile out there. You come to those major intersections, you slow down, you make sure that the folks that have the stop sign, that in fact they're stopped, because you want to avoid any accident out there. And so you want to make sure that you're doing the same thing in a stock chart as well. Well, what happens here is if this swing point gives way on the weekly chart, there is nothing stopping the euro from moving all the way back down to its lows in July of 2012. That is on the weekly chart out here. 877-927-6648. Give us a call, folks. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. In the pre-market here, you got Apple. They closed at $461 yesterday. Right now, trading out at $457. Looks like that'll pop to the downside. Cliffs Natural Resources, they closed at $21.43. They're taking a little bit more of a haircut, trading out right now at $18.40. ASML Holdings, they closed at $66.96, trading at $65.25, and then you've got Francesca Holdings. They closed at $30, $30.15. They're trading at $28.65. Let's go down the street to Tampa to our man Tom. Tom, thanks for calling. Thanks for holding. How are you this morning?
Good, Steve. How you doing?
Excellent, excellent. You wanted to take a look at the euro. Tell me what you're doing and how it can help you.
You think that's going to bounce? It took a pretty good move down last night, didn't it?
It has. What's your time frame for taking a look at it? So when you say is it going to bounce, give me that kind of,
Well, I was just wondering. I mean, it's a pretty good move down. I mean, you think this baby's just? Where do you think that it broke support last night? Didn't it?
It did. It broke. It actually on the daily chart. It broke support 2 days ago when it closed below the December 7th level, that swing point, and made 100% move of a move. And it had done that really on the trading session of March 18th. So what the euro did was it just simply moved sideways in a little tight trading range, and then finally broke through there a couple of trading sessions ago. And now the next level of support is really down here at that 126.5 level. I suspect that's where it's going to go if we were to take a look at, and that's on the daily chart. It broke a hammer candle, and when you break a hammer candle, it says you're going to go to the next level of support. So that's really clearly marked out on the daily chart. Now, whether it stops there or not, that's not like it's a huge level of support there. It is a swing point, but not a lot of bulls hanging out there. If we take a look at more of a shorter term chart for you, Tom, let's take a look at the 30-minute chart. And as we look at the 30-minute chart, really since the move down here, and we'll talk about the move down since 3 o'clock this morning, which is when London is coming online in the currency market out there, and that is certainly establishing the trend right now for the day. The 30-minute chart absolutely has moved into the oversold territory. You had a little bit of a little piercing, bullish engulfing type candle right here at 8:30 this morning, but you're not seeing a whole lot of movement here. So can I make a case that short term it needs to work off this sold condition? Sure. Last time it got down there, it just simply traveled sideways, created a little consolidation box out here, and that consolidation box really starting at about 2 o'clock on March 25th out there. Now, when you break a consolidation, you're typically going to make the exact same move in that consolidation. So if we measure that here, let's take a look at that little measurement. So we'll use the most that we can out here. I'll put a little yellow box, and you can see that it's basically down right around that area right now. So if your question is, can we see a little bit of a bounce here? Is this a bounce you'd want to play to the upside?
I was just thinking, if we're going to get back up there above that 128 area, do you think we'll see that, or do you think it's pretty much downtown from here?
I think it is downtown for a little while, until the key is going to be really the best way to answer that question would be to watch the daily chart. If there is some type of bullish candle that gets created, could even be created today, whenever that occurs, then at that stage, then you could see maybe a little bit more of a bounce. But right now, there are no bullish, there's no bullish candles in sight, and it would really be the daily chart. So if you were somebody that was trying to take a counter trend bounce in a long position, I would say you wouldn't want to do that until you saw the bulls come in on the daily side, because you want to see where Super Mario Draghi and his band of I guess one brother and sister out there, the troika they call it, in the U.S. In the U.S., I believe we call that the Trilateral Commission out there. So maybe it's one and the same, but so far they have not. Now, what that says is, there's a lot of selling pressure out there. So if you were over in Europe, if you had been watching what was going on, what would you want to hold? Dollars?
Exactly, dollars, right.
And so that's what we're seeing. And the U.S. dollar index, that is saying that wants to really break out. The U.S. dollar index, is breaking above the 0.786 Gartley sell pattern. Has it totally broken it just yet? No, but when it does, and it looks like it's going to, that's going to turn into a real expansion. And, yeah, it'll first do a 100% move of a move, but when these 786 Gartley patterns, when they fail, they spread their wings, they turn into big butterflies. So I think it is curtains for the euro for a while here. I hope that helps you, Tom.
Yeah, it does. It's awesome, Steve. Appreciate it.
Great. Okay, have a great day. 877-927-6648. We get back, we'll go see how these markets are going to open, and then we can look at anything you'd like. Just give us a call, folks. Bye-bye. Or bye. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow trading up 106 points out at 14,452. Composite down 24. S&P's off 11, trading at 1552. Russell 2000 down about 7 points out at 942. Google off $7. Apple down 640 right now. Microsoft down 5 ticks. Intel off 21 ticks. Cisco down 11. Leading the charge to the upside. This only makes sense. Talk about irony out there. How ironic can it be? Mattress Firm is up to the is the leader in the clubhouse, up $2, up 6.5% out there. I guess there is a boatload of mattresses on their way to Europe. Everybody can't wait to get to those banks, get that money out, and stick it where? Stick it in those mattresses, folks. Mattress Firm. How ironic that the Mattress Firm is the leader in the clubhouse. We'll go to take a look at that Mattress Firm chart out there. One more thing here on the euro. You know, you can see this thing truly pushing down. This is the daily chart that we're looking at, and as we come back and take a look at that swing point right back here in that November 13th level, you did have a little bullish engulfing candle here, but we'll see if this area will hold. It is another 100% move. That's what our expectation should be as it pushes down in that 126.59 area, but these are unusual times out here. Let's go switch over. Let's go take a look at Mattress Firm. Let's go see what this is doing. It's trading out right now at about $33, $33.05, and it's moving into an area that has been a resistance line. We can go ahead and draw that across the screen here. That resistance line really started by this gap down with some substantial volume in it. We'll go ahead and make that black. Now, what we can see here, and I'm referring to the gap down from June 6th, gaps down with 3.8 million shares down there. And as it did, this mattress firm here, you can see the top of the gap. That would be the low of the June 5th candle, is $34.48. Now, what we can see in taking a look at this chart here is that it never really, on any bounces up here, never got up there. That's why you want to be able to go ahead and take that line if you're using horizontal lines, and you know where the ultimate, in essence, resistance would be, but you want to be able to go ahead and pull that line down. So as I do that, we can clearly see where the bears are hanging out. In fact, right back here, July 9th, they can't hide. As Mattress Firm was trying to get back into that gap, you saw the bear sash candle that was created on July 9th out there. As we take a look a little bit further forward here, coming right into the September 18th level, we have a bear sash candle out here. So each time Mattress Firm gets up into that area, the bears have come out of the woods. Now, question is going to be, are they going to come out of the woods here today? Because you got Mattress Firm trading up towards that level. The high so far, 33.60. We'll see if this area acts as a resistance standpoint. Now, where is support on this? As you took a look at this chart, I know somebody out there said, hey, Steve-O, look at that hammer candle on Mattress Firm. That's right. If we want to take a look at support, because here's where the bulls are hanging out, we'll go ahead, we'll put that as a red line across the screen out here, as Mattress Firm also had gapped down on July 17th, gaps down with volume of 1.7 million shares. Not as much as that first gap down, but still a gap down there. But what it did form is it formed a hammer candle. That hammer candle, with 1.7 million shares, the date's July 17th out there. That level was tested. How important was that hammer candle, and how important were those bulls out there? I know that took the position of, let's say, 1.7 million shares during that trading session. Well, I would say that level is pretty darn good support. Why? Well, Mattress Firm goes ahead and gaps back down here on December the 5th. Does it with 3.5 million shares. 3.5 million shares going against the July 17th, 1.7 million shares. Twice the volume. Couldn't bust through it. It is a high volume low. Does that suggest that perhaps what we'll see here is we'll see Mattress Firm run into resistance where it is right now, and then for whatever reason, maybe that ship gets turned around and doesn't go to Europe, and they don't need all those mattresses for all those euros that they're going to tuck away, inside that. In fact, they don't want. Somebody might be saying, "Wait a minute here. I don't need no stinking euros. I just need to convert those to U.S. dollars, or maybe some gold or silver out there." But Mattress Firm running into resistance. You've got a very strong level of support. We can see that. That is the bottom of the hammer. That's why you want to be taking a look at all of your candle signals out there, because that is where the bulls and the bears are hanging out, and you'd like to always know that. Let's go to Orlando, to Rich. Rich, thanks for calling. Thanks for holding. How are you this morning? Do we have Rich?
Yes, I'm here. Are you there?
Oh, great.
Hello?
Okay. I got you. I lost you there for a second. You wanted to take a sorry, you wanted to take a look at Nokia?
Yeah, Nokia. Right, or Nokia, NOK.
NOK. So tell us what you're doing and how I can help you.
Well, I'm just looking at something that would be an opportunity where we had a high volume top there earlier this year, and it's kind of pulled back with lower volume.
Yes.
And it sort of seems like it's it's basing out here. It looks like here 3 days ago it had that spike down. It didn't have a lot of volume, unfortunately, but it seemed like it tried the bottom of what it was in like November, December in that area, or
yes,
in that area there.
Yes. Well, what it did 3 days ago, March 25th, oddly enough, created a little hammer candle. Now, it is really a little hammer candle. Because the low of that's 329, the high of that session was, the low was 319, the high was 329. Right. So that's one of those little hammer candles that, we might have given to one of our kids in their erector set. Or maybe it was I don't know. I can't remember. I don't think my erector set came with a hammer, but
I don't remember mine having a hammer candle.
But you may have a little bit of sort. Let's take a look on the left-hand side of the chart. Now, good point. What Rich did here, which is great, is he identified a high volume, high-ish, I'll call it. It didn't truly wasn't the high, which was January 10th out there, but does have 292 million shares And you're absolutely right, Rick, in that the pullback here has been on lighter volume, so that's a good thing. Down towards the bottom of that relative strength indicator, if we take a look at maybe A to B equals CD pattern, so let's kind of put all the pattern work here. Your A point is going to be the shooting star, the cousin of the hammer candle that you see up at the top out there. So that's a area that oftentimes when you see shooting stars, they don't have to be really tested. Unlike the hammer candle, usually the hammer candle gets tested. But that's your A point of an A to B equals CD down. Your B point is going to be February 4th, 63 million shares, and then not much of a retracement. And when you don't have much of a retracement, I didn't draw that very well. I'm going to try this again. I got thrown out of art class at a young age because I couldn't draw a straight line or couldn't draw a stick body very well. So I knew then that, math was my forte. But let's take a look at the try this A to B equals CD down one more time. So just the 1-to-1 on this would take you to $3.08. And let's see if this by chance went ahead and crossed the B point with volume. So if you cross a B point with volume, that gives you really a confirmed A to B equals CD down. That B point right down here, I'm going to draw the line across the screen. That B point had volume of 63 million shares. And as you came through it, he did it with 51 million shares. So, you crossed it without volume. 308 is the 1-to-1. It's been down to 319, so pretty close. What I would do, you're looking to buy this, I would wait for a little bit of a sign of strength before I would step into this.
Why would you be looking at the ABC down? Wouldn't we look at an ABC up if we went back into, where the heck does it start, further back, where it broke out right from there? Go to your left, someplace in there. Yeah, that would be the A, your B would be the top, and then your B to C would be your pullback here, about a 50% or 60% pullback.
No, you're absolutely correct. So what I'm looking for here is is Nokia completing a pattern, and the pattern that I'm looking for is a Gartley buy pattern. And so in a Gartley buy pattern, you're exactly right. There was a nice move up in Nokia off of July 18th low out here. And if we just take a look at our traditional retracement levels coming off of that low from July 18th at $1.63 all the way up to the 490, what we'll see is that it's right now in between a couple of floors. It's in between the 382 and the 618. The 618 level will be about $2.88 out there. That's off of one set of swing points. Let's take a look at the next set of swing points, which are September 6th. I'll try to put this in a little different color out here. That will make that dark green. And what we can see right now in dark green off of that swing point, it's made it to the 0.618 level. And what I'm looking for is a Gartley pattern to set up. So that's why I was looking at first the A to B equals CD down, because that's in essence the move that it is making here. And I wanted to see what pattern is it completing to the downside. Okay. So off of this swing point, the second one here that we use, which was September 6th, it has formed, I'll go ahead and draw it in so it's in Technicolor out here. It has formed a Gartley buy pattern. What I don't like about it so far is I do not like this shallow retracement here. Because when you do a shallow retracement like that, it oftentimes says you're going to do more than the 1-to-1 A to B equals CD. And so right now what that would say is, your best spot of entry here, unless you see a sign of strength, would likely be that larger 0.618 Gartley buy pattern. I'll go ahead and put this one in Technicolor as well. And so that would look something more like this. Now, the reason why I use that, it's not a real pretty Gartley out there, but it is a Gartley nonetheless. What I like about this is as it gets down into this 0.618 retracement off of the lows.
What is that price there? I can't see it on the screen here.
It's right around 288. But what I would do is I would watch the bar of September 5th out there with 220 million shares. So, if it comes down there and it's coming down with light volume, that would be a nice place to take an entry into this.
And the price there at that bottom is I can't see it on
the top of that candle is 290. So you're right in that 290-ish range out there. Where the larger Gartley buy pattern would set up. Now, the key is going to be waiting for some type of bullish signal. So on this shorter term one, you most certainly have it, but it's with a very small hammer candle, and then a very small bull sash candle right here. You really have to blow it up and take a look at it. And those are so small with those small bodies that, you like to see something that's got more conviction behind it. And, yes, this could be setting up an A to B equals CD up. And that A to B equals CD up on the larger Gartley, let's assume that we're patient enough and it moves all the way down there. That larger Gartley could take you all the way to the price point level of $6.11. But first, it will have to, get over that swing point high of January 23rd out there. Let's just put this on a weekly chart here real quickly. On a weekly chart, what's nice is you do have that high volume high on the weekly, January 11th out there. So it does look good. I would just be patient. And again, price may not pull all the way back to the area that we identified. So if you do see a sign of strength, then just be like one of those race car drivers over in Daytona and just start drafting behind that.
Okay. Do you have time for one more, or you have people stacked?
No, go right ahead. Go right ahead. What do you want to look at?
With the financials, do you have any particular feeling? I mean, they've been so strong, but it looks like they're in a pullback.
Yeah.
I'm not sure. It looks to me like they're starting to. I don't know if it's just a pullback, or is it finally starting to give some weakness in here?
Well, there is weakness. So, if you were to go under the covers of the XLF, what you would find first, if you were paying attention to the summation index, the summation index for the XLF has been strong. So what the XLF has done is it has completed a 1 to 1 A to B equals CD up, and that was coming off of the lows back in October. So the low of October 4th, that low of 1095 was your A point, your B point right up here in the March 27 time frame. C point down here right around the June 1st level. So 1-to-1 was 1837, and what the XLF did was got up to a high of 1847. So that's nice. It then created a bearish engulfing candle on March 19th. No really big volume here off of that level, 65 million shares to the downside. So you've got some, where the bears are hanging out. If the XLF gets above 1837, then ideally really 1847. If it breaks above that, then that would be a long position that you might want to consider taking. But right now, the XLF is showing slight weakness under the covers, and it looks like, it too may want to pull back here. Now, the area of support to be watching is really what happens inside the financials, the XLF, when it gets in that March 5th level, because that is an open window. It's a gap up. And so watch as it pulls into March 5th. If it does, and if it's pulling in there to the low of 1787 on less than 66 million shares, you want to see it test that, hold it, and you'd like to see it test that for maybe 3 days or so. And, if you're taking a look at a long position, then that's where you might be able to go ahead and put on a long trade. If you're trying to short the financials, I don't really recommend doing that, because I haven't, even though I see some weakness under the covers, with continued downticks in the summation index for the financials, I don't see any weakness with regard to volume off the top here.
Mm-hmm. Okay. Listen, thanks so much, Steve. I appreciate it.
We appreciate you listening, Tom. Thanks, Rich. Thanks so much. Dow is off 89 points. Composite down 19. S&P's trading out at 1554. 877-927-6648. We'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direxion Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direxion Shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow off 94 points right now to the upside. Netflix leading the charge here. They have taken over for mattress firm. Humana up about $2.60. AOL up $2.50. Amazon up $3. Mattress firm up $2. So they are in at number 5 dollar-wise. You got Google's down. They're the leader in the clubhouse to the downside, off $7 right now. Apple off 6. Priceline off 4. Lindsay Corp down about $4.60. And let's take a look at, so what should we expect for the markets here right now? As we watch the markets trade lower, what I've got is the ES Mini 30-minute chart up on the screen. So what we can take a look at, you can see that it's made over a 0.618 retracement, about a 70% retracement, not a full 0.786 just yet. We can see that it's trading into, I'm going to go ahead and turn these off for a minute here. These are it's the automatic patterns that help me identify expansion and contraction between swing points. What we do know what it's trading into its last bullish set of candles here. You have this little bull sash candle right here coming in at 9 o'clock in the morning. You've got a bullish engulfing as well that followed it up right here at 9:30. This was yesterday. So here is your level of support. out here that it's traveling into. Right now it's trying to form an actual hammer candle as we come in to the 10 o'clock session. If we get a hammer candle close out here, then we will know where the bulls are. It'll be the first time that we've seen bulls since the sell-off, since that shooting star candle that took place at 3:30 this morning. Then what's that set up? It sets up okay because you see that you are in an oversold territory. If this is where the bulls show up, what you should expect is you should expect at least a bounce. Now, is that bounce going to turn into an A to B equals C to up, or is that just simply going to turn into a retracement? I don't know the answer to that, quite frankly. What I do know is that if you just simply on the 30-minute chart, you don't have to trade the ES Mini, but you need to make sure that that is part of your toolkit. You want to make sure that that is a part of your erector set out there because it will help you to understand the heartbeat of the marketplace. Because if you take a look at this, each time the market gets up into the overbought territory on the using that relative strength indicator out here, it's where it typically sets market highs. It did it here, coming back into the time frame of the 24th out there. Now, you don't know where that's going to end up, and you want to make sure that you're paying attention to bullish and bearish candles. But just as the market is moving down here, do I expect a bounce? I do. I just don't know when that's going to take place. How will I know when it's going to take place? Well, we'll know because we'll see a bullish candle. Right now, it's a hammer. That just a second ago as it ticked down, it was more of a piercing candle out there, just simply because of the wick that's out there. So we can see the bulls are trying to take charge here in the ES Mini. If it's not on this candle, we'll watch for the candle where you start to see a potential bounce out here. We know it's up against support just simply by using 100% move of a swing point, by identifying and understanding where the bulls were last hanging out. There was even this little morning star candle right out here. That's this 3-candle configuration right here. As we pull the line across the screen, we'll put that one in black. So we know where the line in the sand has been drawn. What we don't know is whether the cavalry is going to show up here. If they don't show up here, where is the market likely to push down into? Well, it could easily make that 0.786 retracement. That's at about 1543 out there, or it could just make 100% move of a dash down to 1539. But it's really all going to be about also, what's going on inside the currency market, inside the euro. But you can just pay attention to this one chart, to the ES Mini. You can do it on a 30-minute basis. I suggest the 30. You certainly can go down to the 10-minute chart here as well. Boy, time flies. Folks, always remember, folks, you have an amazing power within yourself, and that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day. Look forward to seeing you soon. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.